Dan Stillit is an M&A analyst at UBS. He joins me now in the studio. Hi, Dan.
Hi there.
Why this sudden spurt in the last few days?
It's actually a confluence of a number of factors. The fact that most people identify as balance sheets, I actually rank it quite low, but the fact is, by the end of this year, corporate gearing will be at about the same level as 2004, which was the start of the last M&A wave. But I think first and foremost, it's business confidence. Corporates have spent 2-3 years cost-cutting, restructuring. They're now ready to look for growth. And the markets are more stable for them, and they know that the financing markets are there.
What about valuations? Has perceived valuations held back M&A? Are we back to more reasonable valuations?
Perceived valuations have been a problem. It's not just the absolute level of earnings multiple or a nominal stock price. It's also the fact that the momentum in getting there has been very quick. So for example, your average European company in the last 18 months, up until the end of last year, was up 40%. And attractive stocks were up double that. That's a lot of momentum to present to your board. To the extent that you've had stock prices retreat somewhat back to the start of year levels, which has been the case, that's actually a good respite and encouraging for M&A.
Two trends you say to watch out for. A, watch out for more bids being hostile, and B, keep an eye on those sovereign wealth funds showing an interest in European companies. Just elaborate on those.
Well, sovereign wealth funds I don't think are after control typically, but they are increasingly opportunistic. If you look at the situations that they've become involved in, Iberdrola, Hochtief, Hapag-Lloyd, as of yesterday, Oman, they're inserting themselves as much-needed liquidity in very opportunistic situations where they can pick up quite large stakes at reasonable valuations. So I think that there's that side of it. Yes, I think you'll see increasing hostile bids. It's becoming a fact of life in business, and I'd say 25 to possibly a third of deals will be hostile over the coming year.
It's interesting, in your notes you say the exchanges drama has a few more turns to go. You wrote that before the latest drama, which involves ASX and the Singapore exchange. I mean, we're having all sorts of bids for NYSE Euronext, LSE, Toronto. Everyone's getting involved, aren't they? Where's this going to lead us? How can we make money out of this, Dan?
Look, I think a pivotal stock in all this is Deutsche Börse, and really the next stage of this transaction is what Deutsche Börse decides to do. You could argue Nasdaq ICE put a knockout offer. It's not their best offer, so it's really what Deutsche Börse decides to do next, and what CME decides to do, because it may be CME looks at Deutsche Börse. So actually, Deutsche Börse is, I think, one of the most interesting stocks in the situation.
And in 15 seconds, Dan, the hot industries to watch right now when we talk about M&A?
I would say certainly in Europe, industrials, healthcare, and transport, defense and aerospace. In the US, I would add to those the multi-industry players and consumer.
Dan, thank you very much indeed. Dan Stillit there from UBS.